Accel is a venture fund, tech-oriented venture fund, which is we've been in business in India for about 10 years. And the areas that we focus on are B2C marketplaces, various kinds of consumer businesses in the B2C space, fintech, enterprise, global enterprise from India, B2B, and healthcare.
Is there a particular investment philosophy that led you to these sectors specifically?
So we follow what entrepreneurs are passionate about and what they're doing. And I think when we started out 10 years ago, there was nothing in the ecosystem, there was no infrastructure, right? So when we first invested in Flipkart, there was no logistics support, there was no payment support for them, there was no ecosystem that they could kind of lean upon. So they had to build, they went through the whole process of building from scratch. So there were very, very interesting times for the consumer businesses. And so that's when we started kind of backing consumer businesses. As things evolved, Indian entrepreneurs said, hey, you know what, why are we just building products? They thought, we could build great products for enterprise customers globally, right? And that's when we started backing people like Girish from Freshdesk, Freshworks now, where they actually service customers and build products for customers from India. Right?
So it sounds like a bottom-up sort of approach.
It's really, it's as the opportunities evolve in the ecosystem, and in the last few years, there's been a proliferation of mobile phones in this country, right? So now every business, the extended enterprise, both internally and externally, everybody has the equivalent of a computing power of a laptop, which was not there before. So now India B2B is starting to become very interesting. So we have looked at opportunities as they've evolved, and we have a kind of an interesting approach where as we kind of see some of these opportunities evolve, we double down on that space. So we just don't do like one or two in that space. So we look at that space and it's what the space can offer holistically. So for example, in the enterprise, global enterprise space, we have done 15 to 20 companies. Now in India B2B, we have done 15 to 20 companies. We have done 40 to 50 companies in the consumer space. So, but one thing that's common is that we are the first institutional investor in 9 out of 10 times. So we have this big philosophy of being first in a company, and I think that really is kind of core to our approach and our philosophy. We want to be the first to kind of spot a new trend or a new opportunity that entrepreneurs are going after.
Where do PE funds generally, and maybe you specifically, add the most value in India? Is it an entry? Is it ongoing ops sort of help, or is it exit? Where do you add most value?
So we look at ourselves more in the venture space. So there is a little, PE is the global moniker, but so in the venture space, I think we really find the early stages of company build and formation and product discovery most exciting. So a lot of us in Accel have been either ex-entrepreneurs or operators, and we really kind of relish this opportunity of co-building or co-creating companies with our entrepreneurs. So we think of ourselves as a seed to scale company. So we believe that the first 4-5 years, that spectrum is very, very interesting. So initially it is how do you discover, initially even before anything, how do you complete your team, right? So when entrepreneurs come to us, in many cases they don't even have a complete team. How do you build your team? Then how do you kind of work with them to build product market fit, right? And then how do you build with them to scale?
But so didn't you identify them as a business model or a segment that you are interested in?
In many cases, the broad contours of that business model is there, but how to take that to market and how to actually create an offering or a go-to-market strategy for that is not clear. at the stage we invest in. So it's really the macro. So it's usually, hey, you know what, when we did Swiggy, our basic thesis was, you know, because of nuclear families and because of how busy people are, we said, you know, people would at a secular level, at an organic level, this whole ordering industry would grow, right? Ordering from home or ordering from work, wherever. And we saw that there was a kind of a vacuum in the space because the current players were actually not equipped to deliver predictably and on time. So the entire thesis was that you have to build a business that would get food to you in a very predictable manner, not once but every time, right? So seed to scale really means kind of you know, working on and just how do we do that, right? We have a very large operating team within Accel. So we have people who can help the company in product, in building out scalable technologies, in their marketing, in their talent acquisition, in their data sciences. So across the board, in areas where they otherwise in the very early stages find it difficult to find talent, our what we call as venture development team kind of steps in and complements their building out.
So would you say your value add is in that scaling, as opposed to?
It's in both. Like I said, it's in all three areas.
Yeah, I was going to say, because didn't you get an award for the best exits?
So I'll come to that. I mean, that's see, exits happen after 8, 10, 9 years, right? But our biggest value add is in the first 3-4 years.
Okay, because of the identification?
Because of helping them get the right talent, helping them identify and kind of zero in and refine the market opportunity, then kind of take that opportunity to scale.
So everybody I've interviewed in this space seems to say the same thing.
Right.
What would you say if I were to cover up the name and your sort of pitch, would identify it as an Accel pitch?
So I think two things. One is how consistent is somebody when they say they're an early fund. So if you look at our portfolio of 130 companies, there are 30 plus companies which are 100 plus million in valuation, where we were the first investor, right? I don't think many other funds can claim that, right? And that's one. The second, I don't know how many funds in India have an operating team of our size, right? I think that really differentiates us. So I would say these would be the two. And maybe the third is, I think we probably have the strongest global aspect to our business, where about 20% or 30% of our portfolio actually caters to a global demand and not just demand within the Indian space.
So your portfolio companies cater to global?
Yes.
Okay.
Yes.
Right. Okay.
So all these three are unique to us.
Okay. Just taking a step back away from Accel, any observations on the maturity or lack thereof of the Indian VC industry? We've learned lessons, but what more do we have to learn?
I think we have supreme belief in our entrepreneurs, right? And they learn very fast. So we see entrepreneurs just getting better and better in what they're doing, right? And all we got to do is just be supportive and help fill in the gaps. And there's this also this very interesting thing that we do at scale. Last year we did 35 events as part of our Learn at Accel program. I don't know if many other funds do 35 events in a year.
So these are
for our portfolio companies, where the best, whether it's Sachin or whether it's Binny or Mukesh or Harsha, multiple folks spend quality time with our portfolio companies on very specific identified themes. And we have these boot camps for companies at different stages, like different boot camps where they go for treks, they go spend time together for 1 to 2 days. So these are all unique ways in which we can kind of accelerate this learning process that you're talking about.
But that's still Accel. Any gaps that you see in your peers? I mean, at the IVCA conclave, your whole industry is here, or a big part of the industry is here. Yeah. Any gaps that you see that the industry still has to learn, and then maybe some advice to the government as well?
I think there's, of course, the big exit question, right, in our industry, and
why do you think that is?
I think it's a function of the maturity of the ecosystem, right? Like I was mentioning, in the very early stages of this ecosystem, probably companies took 12, 14 years before they could IPO or exit. I think in the more recent times, it's coming down to 9, 10 years kind of time frames. Globally, I think the expectation is that people can get liquidity or exits anywhere between 6, 7, 8 years after they invest, right? So I think this time is compressing, but there is a progression, and I think that's an area we need to kind of, as an industry, work on and find ways in solving. And for that, we have to solve liquidity in the public markets. So today, venture funded companies, you don't find too many of these companies IPO in our country, and we don't have either it's an understanding that doesn't exist in the public investors that these are companies that have a great opportunity, and they need to have a share of these companies. It's largely today these large private funds globally that seem to be taking advantage of the India opportunity and not the Indian public market. I think it's something that I believe will change, but today that's a gap.
So is that, you're saying that the public needs to recognize that, but is that, have we ever tried? Are there venture-backed companies that have gone to IPO and not succeeded, which is why you're saying that?
I think they will go there if they find the right valuation, right? So if there are global public PE investors who are willing to value these companies better than what the public markets in India are, or there are other global strategics who are willing to kind of find value in these companies, entrepreneurs and funds will go where the best opportunities are.
Okay. So, and that's been your exit strategy as well, right? It's only about 1/3 or so through IPO, or any through IPO? No.
Not any through IPO yet. Yeah.
So at the moment, pretty much strategics
and liquidity through later stage investors. I would say that there are about 3-4 of our companies that we have visibility of an IPO in the next 18 to 24 months. So
when you say we need to mature in the public markets, who specifically needs to do what, in your opinion, that is not happening right now?
I think it's we have to do some work to educate the folks who underwrite these IPOs and the merchant bankers and so on, to kind of get them to see the value of participating in this opportunity. We need to, I think, work with some of the regulators, and I think they're already, IVCA, for example, that's one of the big areas that they've been working with the regulators to find ways in which they can make this process easier for tech companies, because there are some nuances, right? So some of these companies are not as profitable as what they usually would see in other companies, because these companies are scaling really fast. They're investing a lot of capital into scale. So I think the nuances that there are, I think, need to kind of percolate and proliferate through the mindsets of different people. And I think once, so it's always, how do you break this impasse, right? I think just 1 or 2 great stories will kind of snowball and change things. But yeah, I think it's a little bit that institutions like IVCA, venture funds, together we'll have to make that effort.
What can IVCA do better? Any words of support or feedback to them?
I think there is a lot that constantly change in our regulations, right? And it's very difficult as an independent fund to track every change that's happening across so many sectors. And I think that's kind of the biggest benefit that we have seen of this association, that one, they can be a single voice that represents us and represents the fraternity, and make sure that there is an overall positive outcome from some of these regulations for the industry. Not because we want anything unfair, but we want to make sure that we have a fair level playing field for our entrepreneurs, and we don't want any monopolistic regulations being passed, or any regulations that kind of hunker back to the license Raj type of undue influences. So I think IVCA has a significant role to play, and some of the other areas that we spoke about, I think developing public markets for exits for the venture ecosystem, I think is something that we.
So they've been doing an okay job, or can they do better?
I think as a team we can do better in both. One is making sure we influence the right regulations that is good for the industry as a whole, and doing our bit to kind of further the public market exit opportunity.